assistance that all of the small businesses need throughout the DMV. So next slide, please. Now, what are we here to talk about? PPP 2.0. And in the PPP 2.0, as it's dubbed, there are actually two things that are covered: the PPP and the EIDL, right? The Economic Injury Disaster Loan Advance. Those are the two things that are basically covered in Section 300 of the 5,600-page stimulus package that our agency has actually been tasked to read through and get all these wonderful nuggets of information out of it, codify it, and then push it out to the banks and our resource partners and businesses out there in the community. So we have 24 days to get through all this information and then disseminate it out to the general public. Next slide, please.
Sorry to interrupt, but how much caffeine does that require?
A whole lot. I'm just focusing actually on Section 300 of the bill. But we have people in our capital access group that actually have to go through all 5,600 pages. So they're working around the clock. All right, so here we are with some of the takeaways for the PPP, as I call it, 2.0 legislation. Now, it will be reopened through March 31st, 2021 with an additional $284 billion in funding. Now, this is a Rod Johnson editorial, so I'm saying this up front. If you recall, in the first round of PPP, we had what, $525 billion go pretty quickly, okay? So $284 billion, in my opinion, is not a whole lot of money because we have a lot of businesses out there that are still, frankly, that are still hurting from this pandemic. I'm going to go on a limb, and I think that there will probably be another round of PPP once the next administration, gets in the office, because there are things like, in this particular bill, there was no money for the states and the hospital, okay? And that's huge. Also, instead of getting $600 checks like it is in the current bill, I think in the next bill, there will be checks that go out to individuals for $2,000. I think there'll be more money or more funding for the vaccines to be delivered where they need to be delivered across the country. So I just think that there's actually going to be another round to address some of the financial issues that weren't addressed in this particular stimulus package. But remember, not an SBA stance, just a Rod Johnson stance. All right, so what does this bill have for us? What good things does it have for us? A, it's really trying to focus on the smaller businesses and not the larger businesses. So now it's you can only employ 300 employees or less. 2, you will have used, if you have a current PPP, you will have used either all of the funds or will use the full amount of the funds before you apply for the next PPP. 3, you must demonstrate at least a 25% reduction in the gross receipts in any quarter in 2020 compared to the same quarter in 2019. I don't think the majority of the businesses are going to have a hard time showing a 25% reduction in their revenues at all, not at all, particularly in the restaurant and hospitality industry, okay? And most importantly, small businesses owners can also apply for an initial PPP loan. So for those businesses that missed out on the $525 billion funding, now you have the opportunity to apply for a PPP loan, okay?
Hey,
Next
Roderick,
yep.
A quick question. So for those businesses that didn't get the PPP initially, do they have to go by the criteria for the PPP 2.0? Like, do they have to be under 300 and show a 25% decrease, or do the rules of the first PPP only apply?
I think that for the ones that didn't get the funding the first time, these rules are going to apply that you see here that I just mentioned.
Okay, got it. So the new rules will apply, but they're able to get PPP funds.
Yes,
Okay,
yes.
thanks.
Also, the 60/40 rule still applies, okay? That also still applies. I've been getting questions already about that.
Great, thank you.
Yep. So the next slide, please. All right. Here's the good part, and I think I mentioned it before we came live. There's going to be a simplified forgiveness application for loans under 150,000. So this new form should be rolled out by February 1st. So you may have heard statistics that 87% of the PPP loans were $150,000 and below, okay? Now, right now, we have 3 forms that are out there. The 3508S form that actually came out, I guess, maybe about 2 months ago, and that was for loans $50,000 and below. Actually, 81% of the PPP loans were actually 50,000 and below. All right, then you had the 3508EZ form, okay, and those were for loans of $50,001 up to $2 million. And then you have the 3508, what I call the long form, for loans that were for $2 million up to $10 million. Well, now we're going to have another form that I think will replace the existing 3508S form, because now you'll be able to get forgiveness for loans $150,000 and below, and it will pretty much mirror, if you've already looked at the 3508 short form, it'll pretty much mirror that form. Now, the other thing, borrowers are allowed to specify their covered period between 8 and 24 weeks for the PPP 2.0. Now, this is Rod's editorial again. I don't know why people would choose an 8-week covered period when you have the opportunity to choose, right, between an 8-week and 24-week period. Why wouldn't you take the 24-week period for your covered period to give you more time, you know, to hire back employees and use the money? But again, that's my opinion. So, but under this stimulus act, you will have the opportunity to choose between an 8-week covered period and a 24-week covered period. All right. It repeals the requirement of deducting the idle advance grant from the PPP loan forgiveness. This one is a huge one, and I'll go into the specifics of that in a couple of slides below this one. Okay, but this one is huge. All right, it expands the eligible expenses to include costs from modified business operations, supplier costs, and costs associated with complying with health and safety guidelines. In short, now if you need to purchase PPP equipment, now that's a part of the cost that can be used under, you know, PPP. It's that part of the 40% of operating expenses now. The restaurants, I think the restaurant and hospitality industry will like this. Businesses in the restaurant and hospitality industry are eligible to receive loans of 3.5 times their average monthly payroll rather than the 2.5 times. That's huge, and that's a big win. So I know the restaurants and hospitality industry are very happy to know about that. Next slide, please. All right, so with EIDL, if you remember the EIDL advance, we had run out of the first $20 billion for the EIDL advance. Well, now that has been replenished, okay? So we're hoping that the EIDL advance portal will be open, you know, by February. Now, eligible small businesses are able to receive additional funding if their first EIDL advance grant was under $10,000. So you received an EIDL advance before, maybe it was $2,000. Now you can go and reapply and you can get up to $10,000. Okay, and just remember, for the EIDL advance, it's $1,000 per employee up to the first 10 employees. Okay, so so just remember that. Now, the businesses that are eligible to receive the EIDL grant, employ 300 or less. Now, unlike the PPP, you have to demonstrate at least a 30% reduction in gross receipts in any 8-week period between March 2nd, 2020 and December 31st, 2021. I don't think that'll be too hard to do either. Okay, most businesses have seen a 30% reduction in their gross receipts. And they're located in a low-income community as defined by the New Markets Tax Credit. All right, next slide, please. Now, also remember the EIDL loan portal is still open. We still have over $100 billion, so businesses can still go online through SBA.gov EIDL and apply. And the limit right now is still $150,000. I'm hearing that that will change up to $2 million, but I'm waiting for confirmation on that. Because if you recall, originally when the EIDL program was rolled out back in late March of 2020, you could get a loan up to $2 million. But because there was such a demand for the program that the SBA had to cut it down to 150,000. So I'm hoping what I'm hearing is correct, that the EIDL loan will be able to go back up to $2 million. Now, this is huge. This act reverses the IRS ruling to allow tax deductions for PPP forgiven expenses and clarifies that PPP loan forgiveness is not taxable income, okay? So now the funds that you use to pay your business expenses are now a deduction. And the EIDL and the PPP loan forgiveness is not taxable as income. That's huge. It clarifies that the EIDL advance grants are not included in taxable income. That's also huge because prior to this, it was. It extends the FFCRA tax credits through March 31st of this year, and it extends the employee retention tax credit through July 31st, 2021, and expands the credits. Next slide, please. Now, here is something before I finish up. I want to go back to how the EIDL advance and the PPP loan was supposed to work. Now, if you had applied for the EIDL advance, and we're going to use this example. So you got a PPP loan of $100,000, but you applied for that PPP loan after you received the $10,000 EIDL advance, okay? Now, if that was the case, then that $10,000 EIDL advance was not deducted from the $100,000 PPP loan, okay? So when you went to ask for forgiveness as the borrower, you asked for $100,000 in forgiveness. The bank processes that, they send it to the SBA. The SBA sees that that $10,000 wasn't deducted, right? The advance was not deducted from the PPP loan amount. So now the borrower is left with this $10,000, if you will, gap. And so some banks had already begun sending out notices that the borrower need to repay that $10,000, okay? Well, this act has actually repealed that, okay, which is huge because there were a lot of people getting bills for that difference that wasn't forgiven. So now what I'm waiting for is the mechanics of how we erase the EIDL loan from the bank's, that EIDL advance from the bank's books, right? So more to come on that, but just know that now the borrower won't be left with that difference between what was forgiven and still being charged for that EIDL advance. So Greg, that should be news to you all's ears, right? So that you won't be out there billing customers for that.
Yeah, no, we've already been telling folks, you know, kind of prepping them that this was coming. So we need the mechanics and we'll go from there.
Yep, that's right.
Okay,
Thank you.
I would like to open it up to questions, and I'll call on you if I see your hand raised. But the first one that's in the chat is, will new business owners be able to apply? We bought our business in April of 2020.
So you must have been in business by February 15th, 2020, in order to apply for PPP Grant 2.0.
Okay, Steve?
Hi, Rod. Thank you so much for participating in this and educating us. I guess I have two questions. One is actually fairly simple, and the other one is a little more detailed. So the first one is, we have clients who got, for example, $150,000 or $151,000 or $152,000. Does that $1,000 or $2,000 extra eliminate them from using the EZ form at this point, and they have to use the long form if they're over by $1,000 or $2,000 on that loan?
All right, so actually they would use the EZ form. They won't be able to use the short form.
Okay.
Yeah.
So they still have to calculate, either way, whichever form you use, you still need to have all the backup documentation and detailed calculation for FTEs and the payroll, correct?
Yes, yes. Oh, yeah, yes.
Okay. So the second question relates to the employee tax credit, right? So assuming that you got PPP 1.0 and you used 8 weeks or 24 weeks, once that period was up, are you allowed, if you continue to pay your employees, to take the FFCRA tax credit, or are you barred from taking that tax credit because you got the PPP loans?
You know, I honestly don't know. I don't know.
Okay. No, that's okay. It was just a question.
Yeah,
It's one of those things that folks keep asking us, is once their period is over and they're still employing folks, are they able to get the tax credits?
Right.
Because
Yeah.
during the PPP, you're not allowed to use that tax credit.
Right. And yeah, I don't know yet. Yeah.
Aaron?
Hey, Rod, great to see you again. Thank you for the information as always. I learn everything, something when you're on here. I have a handful of questions,
Uh-oh.
and all I ask is answer them best to your ability. I know the SBA is sifting through a 5,600 page bill, and guidance I'm sure is going to need to come out. IRS is going to need to chip in as well.
Yep.
It sounds like overall on the surface, PPP 2.0 is going to be very similar to 1.0. It's going to be kind of the same drill and same exercise, generally speaking, with, obviously you got to be able to demonstrate a 25% drop off in revenue.
That's correct. Yep.
And then restaurants and hotels get 3.5 months of payroll versus 2.5 months.
Yep.
A couple of questions on that. First question is, what do you need as far as documentation to demonstrate the 25% drop off in revenue? Is it simple as showing a profit and loss for 19 versus 20? Wow.
Yeah, that's it. That's easy. Yeah. Yes.
Cool. That's not so bad. Now, with that 25% drop off, I had a client ask me this question last week. Is it very rigid where it has to be, let's say, April 1st to June 30th, 19 versus 20, or could you do March 15th to June 15th?
Well, usually you're going to use the end of the month figures, right? Yeah.
Of course.
Yeah. You're going to use end of the month figures. So whether that's September 30, 19 versus 20, or, March 31st, 2019 versus March 31st, 2020. I mean, it's, yeah.
I bring it, practically you're right. It's easier to do April 1st, June 30th, but I bring this up because I had a situation last week, and I'm sure there's going to be others, where they looked at their 20 to 19 numbers, April 1st or June 30th, and they were down 20% or 22%. But when they ran it March 15th or June 15th at the height of the pandemic, they hit that 25% hurdle. So that could make or break some of these 2.0 eligibilities potentially.
Yeah, and that one I don't have an answer.
Okay. All right, that's another one to be continued. Okay, fair enough. All right. Let's see what else I have. This was an odd question that I got today, but do you have to use the same bank from 1.0, or can you switch up banks?
Well, I guess the question would be, why would you switch banks?
Well, that's another story, but.
Right.
Oh, I can think of reasons why.
But look, I guess technically you can.
Okay.
But, I think you should use the same institution where you have the money from the first time.
I think
they
practically.
Know you, right? They know you.
Yeah, exactly. And that's what I told the client that I spoke with today. Practically it makes sense, but, there were clients that were very happy, unhappy. And this is not to pick on any banks by any means, but, it's just, there's politics involved with that, but okay.
No, please go on. Talk about the
Um,
that we're happy.
Aaron, can I stop you?
let's see, what else?
Aaron, can I stop you a second?
Please.
Two other hands. Let's go to James and then go to Gregory. And then we'll
Yes,
come back.
I have a couple of questions. First one would be with the idle payments. If one of my customers has already paid that back,
Really? Already?
yeah, she's always on the ball. I've only got one of those at my particular branch. Is there a mechanism for her getting that money back?
Well, she's got to reapply now.
Oh,
She's got to reapply.
right. Well, she paid it off on the PPP loan, so that she has a zero balance on the PPP loan.
Wait a minute. All right. I thought she paid off the idle. I thought she paid off the idle. So did she use
No.
PPP to pay off idle, or did she use? So
How about if I email you separately on this?
Okay.
It's a bit complicated. The easier questions are: will we still be using E-Tran for these applications?
Yes.
Okay, we assumed. And is the deferral period still going to be 10 months?
The deferral, and I'm trying to remember this off because I just read it. It's a 10. Oh, yes, for PPP. Yes. It's 10 months.
Got
You
it.
know what? I was thinking about the Debt Relief Act.
Oh,
Really, I'm surprised no one has asked me the question on that one, on the debt relief. And actually, since I brought it up, then it's the SBA will be making payments on behalf of the borrower for 3 months. For regular businesses and for restaurants and the hospitality industry, it's 5 months.
okay. And the last one I have is: are you guys going to be staggering the funds? I know early on there were issues with larger banks they were setting aside, tranches of money so that smaller community banks would have access to it. Is that going to be done again?
I think that's going to happen. Yes.
Well, we're in favor of that.
So you're going to have more CDFIs that are involved, right? So like your Wakeufs in the area, LEDC, City First, Industrial Bank, those are the local CDFIs that come to mind off the top of my head. Mm-hmm. So yeah, there's going to be money set aside for them to ensure that money gets into underserved areas.
Got it. That's it for me. Thanks. That's very informative.
Thanks, James. Over to Greg.
Yeah, no, thanks, Rod. Your expertise is definitely needed during these times, and always good to see you. And going back to the comment, my team across the region, they've been opening accounts for new business relationships over the last couple of weeks like crazy in preparation for PPP due to how we were able to help so many of our customers in the first round of PPP. So if anyone has issues or they don't have a strong relationship with their bank, I'm happy to talk with them and provide options. We're gearing up over 2,000 employees to be ready to go. My question, Rod, is can someone apply for PPP 2.0 at multiple institutions?
No. Let me
no?
stop. No, we don't want that to happen at all. Okay. Because it caused a lot of confusion. I guess you know that, right? The first time it caused a lot of confusion. They applied with you, they applied with Bank of America, they went to JP Morgan. No. We don't want that to happen at all. Okay, I'm very emphatic about that.
Got it. No, that helps. That helps.
Okay.
No, yeah, that mucked things up too. And I know once they got the SBA number, then it was, hey, we approved you, but wait, at the final step, we saw you got a number from another bank. So it led to a lot of confusion.
Yes.
That's all I got. Thank you.
Thank you, Greg. Over to Dan.
Hi, I joined a little bit late, so I hope you didn't answer this question already. But how, what advice can you give for any banks that are not, we'll say, allowing for the PPP loan repayment, and that time frame is coming up soon? Like they haven't had gotten the forms out to us or anything like that.
They haven't gotten the form. Wait a minute.
The repayment application.
The
They haven't made
forgiveness
it.
application?
Yes, the forgiveness. It hasn't
Oh, okay.
been given out
So-
yet, and the
so
time's coming
you-
up.
All right, so your bank hasn't gotten out the forgiveness. Oh, okay. So they haven't opened up their portal to you yet, or maybe they are staggering their forgiveness applications, and you just haven't been informed yet that it's open.
Right.
Not to worry, because actually there's going to be an extended period, so I wouldn't worry about that right now. You have time.
Okay. I was trying to find. I didn't think of that.
And
until you said it.
particularly since we have a new form coming out. So depending on the amount of the loan anyway, if it's $150,000 and under, you might as well wait until the new form comes out before applying.
Okay.
I think Dan was a little late. He didn't hear that beginning part. Aaron, back over to you.
Thank you, Margie. Rod, you brought up something very important, is that if you're going to be eligible for 2.0, you got to spend all the funds from 1.0. And I've got
Yes.
some instances where, I got some clients where the 24 weeks expired, let's say October, November, and they may have had like a $200,000 loan, but maybe they spent 180 as an example. So
Bonus
do they
it.
need to spend? Bonus it. Spend it.
Bonus it.
Spend it.
Yeah.
Spend it.
Yeah. Give
Even
those
if you can't
employees
get
a bonus.
forgiveness, so spend it. Even if you can't get forgiveness, you got to spend it
Spend
before you
it.
go for
Spend
2.0.
it. Yes. Spend it. Give the
Okay.
employee hazard pay or something. Yeah.
Okay. Good to know. Very important. You know what I really like is the non-payroll costs, the 40% bucket. There's a lot more stuff that's inclusive this time around, like safety equipment, stuff to suppliers as an example. But one thing that really jumped out to me is that, for eligible costs for this purpose, it could be stuff that was paid in 2020 from what I heard. Is that correct?
That's
Like
correct.
safety equipment?
Yep. Yep.
That's great.
That's
huge.
right.
Interesting. Okay. This one you may not have the answer to, but I think a big reprieve that some of our clients are going to get, one more, okay, particularly on the hospitality side, is that, they spent all the money in 8 weeks or 24 weeks, but they couldn't, maintain their workforce status quo. But there was a get out of jail for the FTE safe harbor reduction, which was if there was guidelines from the federal or state government with health restrictions or guidelines and you couldn't operate the same revenue, you wouldn't get docked for the full-time equivalent reductions. Is that going to be the same for 2.0?
Yeah. Yeah.
Or to be determined? Okay.
No, it is going to be the same.
Okay, very good.
Okay, Aaron, over to Stephen first for a minute. Go ahead, Steve.
Hey, Rod, if you could share your knowledge with us regarding the whole owner compensation and what the limits are regarding on either the PPP 1.0 or 2.0, what's allowed and not allowed. We're getting that question a lot.
And see, you know what? Honestly, I don't know it off the top of my head. I always have a cheat sheet for the 1.0 that I look at. So I can't actually answer it like right off the top of my head because I don't have it right here with me.
No, it's not a problem. Thank you. I'm sure
So
we'll touch base at another time.
Yeah. I was going to say call me and then I can actually look at it because I want to be accurate with the information.
Okay, if anyone has
Thank
other
you.
questions.
Yeah, we're getting a lot of those.
If anyone has other questions, please raise your hand, and then I'll go back to Aaron.
We have plenty of time. I was going to say we have plenty of time.
We do.
Everybody else first, then you can come back to me, please. Okay.
Go ahead, Aaron.
Well,
Sorry, I was on mute. Rod, I think with the $150,000, one pager effectively, I think what's a very important point, and I'd like for you to elaborate on this, is that, well, if you have a loan under $150,000, effectively it's forgiveness. You just sign the one pager. But what I think is very important from what I've heard is that you've got to certify that if you got that loan on $150,000, you spent all the money within the time frame, you spent it on payroll and the non-payroll costs. Basically, you got to certify there was no abuse. You did what you're supposed to. You played by the rules.
Right.
Is that correct?
That's right. That's right. Yeah.
Yep.
That's the beauty of this thing. Yes.
Right. And which is great and all, but the thing is, it's not, if you have somebody where they just got the money and they pocket it, that doesn't work. You've got to sign off that you did what you were supposed to. So it's not necessarily automatic forgiveness. You're just certifying that you did what you were
Right. You're
supposed to.
certifying. Yeah.
Right.
Yep.
That's a key point. Okay. Let me see if I have anybody else. This one you may not know the answer to, but what do you think the timeline is going to be once the paperwork is ready? And I imagine it's going to be at least a few more weeks, but what do you think the timeline is going to be once everything is up and ready to go from loan applicant to bank to SBA and then money to the loan applicant?
Well, in terms of money to the loan applicant, right, that's going to be up to the bank. So let's just say that the M&T opens their portal, right, on February 1st, okay? And it's probably going to be around that time that the portals, I think, are going to be open.
Okay.
Then it just depends on how many applications M&T receives to process. Now, what I think I can say with Greg here is that now that they've gone through the process before, they should be able to process these requests a whole lot faster than the first time, right? So I would like to think that it shouldn't take more. And Greg, do you have some stats on how long it took you you guys the first time to process the average application if they had all of the information that you needed to get it processed? Was it about a week?
Yeah, I mean, we were working 24/7 in that first initial round, and we got through 35,000 applications for $7 billion, which was 97% of the applications before the money ran out. So
Okay.
that was pretty much all of them in about a 4 or 5 day period, which, I mean,
Yeah.
it was. But that's with due diligence too. I mean, we were calling at 2 a.m. to get signatures and initials and stuff like that. But yeah, it was quick. I hope with the targeting, you know, the demand won't be as high, but I think it's going to go very, 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 very quickly. And that's why I asked the question about execution and in terms of, you know, which banks have invested in the, you know, the processes and procedures and which ones haven't. Because that money is going to go quick.
Yes, it will. My editorial, I think it'll go within 3 weeks, 3 to 4 weeks, because demand is going to be so high. So I'm just telling people on other Zooms, the borrowers, have your documentation ready to hand your bank so that you can be in line first and get processed and get the money.
Mm-hmm.
That's a good point. I agree with that. I think that actually might be all my questions.
Okay, Lynn?
And let me say this, I know that people are anxious to get forgiveness, but again, if it's 150,000 and below, just hold off for another few weeks before you ask for forgiveness. It just makes sense to do that.
Lynn, you're on mute.
Thank you. I'm sorry, you may have answered this before. I had trouble getting in initially to the Zoom for some reason. I usually don't, but so are you saying that the new bucket of the 40% that can be used for expenses, actually under the PPP went up to, I'm getting all my numbers confused now. The bucket expense, other than payroll, that there was the rent, utilities, and all that kind of thing, and now it's been expanded a little bit. Is that expansion of what are okay expenses retroactive to PPP1 forgiveness as well, or is that just for the new round?
Well, as Aaron stated, it can go back for certain expenses back to 2020. Okay, so it can be included into that now 40%.
Okay.
And just make sure, again, you have all your documentation.
Right.
Because it is all about the documentation. Okay, I can't stress that enough.
I mean,
And Stephen has his hand up, I guess, about the documentation.
yeah.
Did you want to comment, Steve? Oh, no? Okay.
Not about the documentation. I actually, it may not be the right time, but I actually wanted to not only acknowledge you, but also acknowledge Margie for putting this together. So huge kudos and thank you to both of you for really putting this together. There's so many people that need this information. And I'm sure if it was allowed, there'd be 10,000 people on this call, on this webinar. So thank you so much both for putting this together.
Oh, sure. Now, Aaron, I'm going to give a shout out to your profession, right? The accounting profession. I am telling firms that particularly if they receive loans over $2 million, that they need to engage a CPA, because I'm getting a lot of phone calls from owners that have PPP loans of 2 million plus, and they're trying to do this, the long form themselves. I'm just shocked, okay, that they would be a do-it-yourselfer. So I've been, really stressing to them that they need to engage a CPA to assist them, particularly with the long form for forgiveness. Did you want to say anything about that?
No, thank you, Rod, for the shout. I appreciate that. I mean, in all honesty, I have not come across that many that are $2 million and up. It is a long form. The big thing that comes with the $2 million up is that they're really certifying, did you really need this loan effectively? It's kind of the sniff test. That's what that's kind of the way I say it, but happy to help out. And in all honesty, even if the loan is under $2 million, it's worth the investment to, have an accountant or a CPA, just somebody just surface it or even fill it in just to make sure everything checks out. Because if something is missing or something is not filled in correct, it will delay the process, both on the forgiveness, but even going for the application with round 2. It's a good investment. I strongly recommend it. And myself, Steve, and other accountants, we've done enough of these now. We've been doing this for a few months now. We've got this down to a science.
Yeah.
Well, and I think it's important, again, to reiterate that you can self-certify, but you still need to do the backup documentation and your calculation to make sure that what you're signing is actually valid and real. Don't just sign something because you think you got it.
That's right. Now, remember, I think people should remember the time frame, right, for forgiveness. It's 60 days that the bank has to look at, what you've sent to them. And then the bank sends it to the SBA, and the SBA has 90 days to review what the bank has sent them. Now, I've been getting phone calls where the borrowers think that the bank has the final say on the forgiveness. And I'm saying, no, the bank does not have the final say. The bank may tell you that it looks good, okay, that you'll be forgiven, but it's actually the SBA that has the final call on whether or not, it's 100% forgiven, 50% forgiven, or not forgiven at all. Because there are people that have actually not used the funds for the purposes that they were supposed to be used for. For example, paying down existing lines of credit or existing term loans, okay? And so no, that's not, or for new business development, developing a new website, bringing on a new business development person. I've heard it all through all these phone calls that I've received, okay? That was not the intended purpose for PPP. And so I'm just letting these owners know that once they fill out the forgiveness paperwork, that it's more than likely that it's going to be rejected and they're going to have to repay the loan to the bank.
Okay, Cindy?
I know it's a little bit early to ask this question, but at some point, I'm assuming there will be auditing of the transactions. And do you see that that's something that SBA is going to lead, or how do you see that rolling out?
Well, I'll put it this way. If it's 150,000 and below, I shouldn't say it this way, it's going to be kind of okay, we believe what you've told us. But if it's over $2 million, it will be scrutinized. It will be, quote, an SBA audit that's done for those loans that are $2 million up to $10 million. Now, the question has been asked of me, well, how long do you think that audit will take? And right now, I don't have an answer for that. And actually, I've run it up to Flagpole to say, okay, guys, can you give me an estimate of time of how long the audit would take for those loans over $2 million? But not yet. I don't have an answer to that yet. Also keep in mind, and I think I'm using the right time frame. The SBA has 6 years to come back and audit your books, okay, for this PPP. For EIDL, I think it's 4 years. Yeah, for EIDL it's 4, and PPP it's 6.
We have done many, many webinars on accounting for these loans and grants, and hopefully people have, I know Steve presented a great spreadsheet for businesses to use. Hopefully they took advantage of that. Any other questions? I don't see any other hands up. If you have a question, please take this time, unmute yourself and ask your question. You have experts here in the room.
One of the things that I've also seen, and Steve and Aaron, you can chime in. And so what I've seen is companies taking the PPP money and actually putting it onto their profit and loss statement as revenue instead of the proper, booking of putting it as a short-term liability on the balance sheet. And then when it's forgiven, then it'll show up as an extraordinary item. And so that's actually what I've been telling people that have been booking this thing as revenue. So I said, look, maybe you need to go ahead and hire a CPA just to help you with the basic mechanics of how to show this PPP loan. Have you all seen that in anything that you've run across in working with your clients, Steve?
Yes, I have.
Absolutely. Multiple times, and we've had to make the corrections for them. So.
Yeah, I think the key takeaway is it's a loan. It's a loan on the balance sheet until it's repaid or forgiven, until further notice.
And now that the deductibility of the expenses are allowed, it even makes it easier to not speculate, right? We're allowed to really run the P&L on the balance sheet the way that it should be. So that is awesome. Absolutely awesome.
So that means then we shouldn't see that many extensions, right, for the business tax returns.
Assuming clients participate, well, yes. Now, all kidding aside, we were very concerned about 6 months ago that we thought we were going to have a lot of extensions. And before the tax deductibility was allowed, the IRS came out and said, okay, if you can reasonably estimate what you think is going to be forgiven, you can deduct, or add back essentially what's not, what's going to be forgiven in 2020. You can flush it out in 21, but non-issue now. So, but in essence, the big thing is for tax time, though, is that you just got to make sure that the presentation is correct, that you deduct the expenses as you normally would, ordinary course of business, and that loan it's a loan, and it will be converted to income most likely in 21 sometime. But some people have gotten across the finish line in 20 already, but still.
I'm recording, I have been recording this webinar, and I will be putting it up on the Chamber website and along with this PowerPoint presentation. So you'll be able to view it by the end of the day today.
Oh, you know what? One thing I want to, and Greg, if he's still on, one other thing I want to mention is for the SBA Express program. All right, it normally goes up to $350,000, but because of COVID-19, it is now up to $1 million. Under normal circumstances, the SBA guarantee is normally just 50% for SBA Express loans. Now, because of COVID-19, that SBA Express loan now comes with a 75% SBA guarantee. All right. Now, for the regular 7A program, as you know, the 7A program, depending on the dollar amount, but I like the big dollars of $1 million or more, okay, you would get a 75% guarantee. Now with that 7A program, the bank receives a 90% guarantee for that loan. And as you know, with the SBA 7A program, you can use it for lines of credit or to purchase real estate up to get a guarantee up to $5 million. So I think business owners also need to know about that.
Yeah, that's some great enhancements to the SBA products. I mean, it's that's going to be a big help as we go into 2021 here.
Yes.
Thank you.
Is there a one-sheeter I can send out to our businesses about, the differences?
Actually, we are in the process of developing that one-sheeter that you're talking about. We sure are. Yes.
That would be great. Because, once the portals open, all the chambers get bombarded with calls. So, if we can help along the way.
Well, I want the business owners to understand that all the banks outside of PPP have plenty of money to lend, okay? They really do. And the SBA is right there with them to make sure that they can, increase their loan portfolios while minimizing their risk using our guarantees.
Excellent. Thank you so much, Roderick. I want to thank Aaron for sponsoring this program today. Stephen, thank you so much for being part of our team here. Roderick, I think we set this up on Christmas morning. I think you and I were texting each other on Christmas morning.
Yes.
I'm
Yes.
like, someone else is working along with me, but we want to be able to get this information to you as fast as possible, as soon as possible, keep you in the loop. And I really believe everybody on this call here, you're really our A-team. I mean, you're really the ones who are getting this information and can disseminate it and work together, for the greater good for the businesses. So I want to thank all of you for being on this call as well. Okay, I'm gonna let you loose 10 minutes early, unless anybody has one more thing to say. Otherwise, I want to thank you all very much and have a great week. And I'm just gonna say one thing about the chamber, because that's my job. Tomorrow morning, we're having a new member orientation at 8:30. And it's also going to be an introduction to new chamber board members, as well as some new benefits that we're going to offer. So that's tomorrow morning at 8:30. And then on Friday, we have a joint lunch with Bethesda Chamber at 11:30. You can meet Allie, the new CEO of that chamber. So those, and then we have a new mastermind we're starting next Thursday. It's for real estate mastermind. So we have a lot of things in the works. So just check out our calendar of events on rockvillechamber.org and just sign up for any of them. So, and if you can think of another topic you'd like us to cover, let me know. We're more than happy to do it. So again, Roderick, thank you so much.
Happy to be on.
Thank you so much.
Thank you, Rod, as always.
All right. Good to see everybody. Happy New Year.
Happy New Year, everyone.